the pause that refreshes, or is some consolidation in the cards? Again, I mean, when you've gone 24 days, almost a month, without a 1% move in either direction, that sort of gives you an idea that there's been a resting period in place for this market. What breaks it?
Well, look, I think it's necessary to have the perspective of what happened up to that point. And up to that point, early on, you go to April, we had a major decline, and that was a series of 1% corrections in a row, bang, bang, bang. So now we're sort of like, you got to take a look at the average over the year or 6 months, pick a time frame, and I'd say we're right on schedule. So in terms of 1% corrections, we've had them, now we're digging out of them and going higher. Look, I don't really buy into the phrase the market is tired. Market's an inanimate object. It's without catalyst right now. So you need a catalyst to break it one way or the other. That catalyst could be, I assign a 10% probability to the Fed cutting today, actually. I would have a 50% probability, and I think it's actually unlikely, 10% is just to have some probability. If we didn't see the assault on the Fed, the Fed should cut, but right now they have to protect their independence, so can't count out to that. However, I do believe you'll see more than one dissent, which is very rare, and that September or sometime next few months, next 2 meetings, you will see the Fed cut.
Well, to your point, Nick Timmeros at the Journal today says you could have dissents potentially by Waller and Bowman together, which would mark the first time in 3 decades that more than one Fed governor dissented at a policy meeting. That is sort of what's at stake today. Let's just bring in Steve Liesman now, our senior economics correspondent. He's going to help us set the table for this decision today. So we have that as part of the backdrop. Is there a dissent? And does a dissent carry the stature, if you will, of 2 govs, which hasn't happened in some 30 years? The president, once again, on Truth Social, points out the GDP print today, which was 3%, Steve, way better than expected, he said. Too late, referring to Powell, must now lower the rate. No inflation, let people buy and refinance their homes. Weiss says 10% probability that Powell and company cut. What do you say?
As the limit goes to 0, I don't think the Fed is cutting today. I think the dissents by the governors matter. I think there's a case to be made for cutting. But Scott, can I just for a second here? I know the market and you guys around the table are so over tariffs, but I don't think the Fed is. I don't think economists are. There was a report out this morning from Goldman Sachs, and you can write these numbers down. So far, they have calculated, they're looking at the Treasury data and the customs data, a 7.4 percentage point increase in average tariffs. They believe it's going to 14%, which is to say that they are calculating we've only seen about half of the full economic tariff impact that's coming. They think it's ultimately going to a 17% increase in tariffs. That's one of the things I think the Fed is looking very carefully at, that is staying their hand. This may be that old song, Scott, see you in September, but it could be October or November before the Fed feels comfortable. You get 2 more months of inflation data, but this tariff stuff is still just working its way through the economy. I know everybody wants to move on, but that's just the simple case.
That's fair. Wolf Research today says there's growing risk of the Fed holding steady for the whole year, Steve, for the rest of 25. I don't think the market necessarily has that on its bingo card. You also have the wild card, if I could call it such, of Jackson Hole, where Jackson Hole usually is not a non-event. And it may carry a special bit of weight this time around, just given the president leaning on Powell, the idea that Powell wants to cut because he said as much. He's only paralyzed, so to speak, by the fact of the tariffs. And the data that you said suggests that the worst is yet to come. We just don't know.
Well, I can just tell you, Scott, I used to do a whole lot more fly fishing in Jackson Hole than I've done the last, say, 15 years or so. It's been a lot more work than it used to be, and don't cry for me. But in any event, I think that's right. Powell does want to cut. I think the board wants to cut. The committee has, on average, 2 rate cuts penciled in. They'd like to get there. But remember, it's not only the data. The Fed, and Powell has said this several times, they feel it's their responsibility in what they say and what they do to make sure there isn't more impact from tariff inflation. So what they say and what they do will have an impact on that. They've done a pretty good job of sort of saving Trump from himself, in the sense that you have not had a big surge in inflation expectations. You can't at once say, hey, inflation's under control and the Fed's doing a bad job, because those things is a huge disconnect. If indeed the Fed is doing a bad job, you'd have inflation out of control.
Steve, don't you think, though, that, or what do you think about this? There's the narrative out there that inflation's a one-time event. Prior to these trade deals, the Fed really didn't have clarity on what tariffs would be. Now, at least, India aside, and details of the current tariff deals somewhat unknown, but we know at this point that 15% is sort of like the base rate and, in fact, the final rate. So the narrative that it's not really going to be long-term inflation, it's one and done on inflation, and now we have clarity, gives the Fed the ability to then opine on easing and perhaps do it in September.
So I think there's definitely an argument about that, but ask yourself, Steve, the following question. Why are tariffs a one-time price increase? Is it because they're simply on their own a one-time price increase, or is Fed policy and Fed job owning part of what keeps it that way? That's really the key here. Remember when we had the supply disruptions during the pandemic, there was stuff that went up that was supply constrained and stuff that went up anyway because it was an excuse by retailers and manufacturers to raise prices. The Fed wants to see that. So you've had this interesting effect. You have had tariff inflation in the CPI and the other indices. You've had disinflation in other places. That could be because, Steve, the Fed is restrictive. Look, I think they want to get back to neutral. That's a key. And by the way, I have just a quick chart I want to show you, which is showing how rare these dissents are. There's been only one governor dissent during the Powell era. If you go back to 2018 when he took over, presidents more likely to dissent, and dissent for tighter reasons. But go back all the way to 1936, which our data do, and you can see governors dissenting, a little more common, and dissenting for easier policy. A lot of that during Volcker, a lot of that during the 60s, when governors were more opposed to tighter policy, and they ended up being wrong.
Well, we'll see what happens today, more so what Powell says and how he answers questions from the reporters gathered in the room like yourself. And we'll look forward to seeing you there, Steve, as always. Steve Liesman, our senior economics correspondent. I mean, Bryn, they could cut 25 basis points is going to make a difference. I mean, I guess it would to the president. They can give a nod to the prez. They can give a nod even to the data. Right? Data's strong, like the president said, 3% GDP, labor market's still good, inflation's not running away again. Maybe it's elevated a little bit here and there. I don't know you'll get that today. Do you even care what happens today?
Well, I don't think they're cutting today. That just doesn't even seem to be on the table. I think what's going to get spicy is after the meeting, what President Trump says about that meeting. And so I think where Powell's in a really precarious spot is that, so inflation, let's say, is around 2.5 to 3, right? The numbers are jumping around a bit. I definitely think it's going to take a couple of quarters till you actually see the impact of tariffs. Because if you go into the CPI data that we just got for June, like window coverings were up like 5% month over month. You have these like items, beef has been up. And so are those tariff related, et cetera? And so we're going to need a few months. But if you go back to Trump's point, it's like Chairman Powell cut rates by 50 basis points in September of last year. Like, why 50? And so to me, when I look at it pragmatically, you have the 10-year at 435. You have Fed funds at 450. Inflation's 2.5 to 3. It's like it seems tight right here. And so I think where the Chairman Powell is like, we don't want to cut 25 and then stop and then go up and down. They want to start getting into a glide path one way or another, hopefully down. And so that's why I think you're definitely not going to see it. But when you just look at where Fed funds in the 10-year is versus inflation, even if you go up to 3, it's like there's room to start cutting. And so I think the Fed, unfortunately, will make the mistake the Fed always makes is like they're too late because they wait for the data just to be right in front of them.